Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson, coming at you on an early Monday morning. Voice a little bit raspy. I'm dealing with a little bit of a cold, but you know what? We power through. For those of you new to the channel, do me a favor, click that subscribe button down below. We look at the same 10 to 12 futures markets every day, leaving the lines on the charts. The important thing to remember about leaving the lines on the charts is that it holds us accountable to our trades, and what you start to realize is that these levels will hold together over time. So let's go ahead and dive right in. So some of the lines I put on came from last night's live trading room. We had a live trading room last night at TradersArmy.com, and some of the levels are from there. So I will I'll talk a little bit to some of them. One that we had talked about was if you were a little bit more aggressive, a potential breakout long above this area here in the S&P, and we're getting to that region right now. You know, I think there's a chance that if you get there, you've got at least a 1-to-1 trade to run it up to this 2700 area, 2702 range, and then if it breaks through there, you've got a potential all the way up to here. So we could see a bit of a base forming. You know, there's a little bit of momentum kind of happening. Excuse me, not momentum to the upside, slowing of momentum to the downside. When I throw a momentum indicator on here, you'll see that we have lower swing lows in price with really big candles there. You'll see that we have lower swing lows in price, yet higher swing lows in momentum, and that could be a signal for potential reversal. Not always, but you know, if you do have the right setup, you know, you can take a breakout to the upside on that. Now, overall, I'm still net bearish, right? My big picture is still down, and so I've got a couple of opportunities, possibly this one up here in the Nasdaq, where we have this little wick up here that could serve as a potential reversal. We've already hit there once and moved down. Those of you that watch the DMC on a regular basis, hopefully we're able to catch that move to the downside. But we're between a daily level of fair price value down below us, which is this area here, and then this 4-hour level up above us. So in a downtrend, no question about it, but that downtrend does have some support down below us where we may see a bit of a reversal. And this is not uncommon, right? In a down market, for us to retest lows, you're just basically retesting those February lows in the Nasdaq. Crude oil. So crude oil, we still have the same breakout trade that we had earlier last week. This hasn't really changed. We've maintained our stance on the same level in the same area. If price breaks below here, that short does still indeed exist. And then gold, we have a potential reversal point up above us here, and then a potential breakdown down in this area. This is the exact same trades that we've had in play in gold now for almost 2 weeks, and there's, you know, we just haven't made it to any of those extremes. So don't force the trade. Don't force it if it doesn't come to you. Moving over to our bonds and currency markets. Don't have a whole lot to add in our currency markets or our bonds. Our bonds, we actually have an upward trend channel kind of forming. There's a potential for a reversal if we come back a bit lower in bonds, but there's nothing clean in here for a strong reversal. So I'm not going to really add much to what's happening here in bonds because there's no clean areas for a solid reversal until this area way down here. But then when we get down to there, our trend has changed. So I'm a little bit cautious on the bonds. In the Aussie, you know, we've got a reversal area way up here, 718, 7201. There is a potential for, you know, for a bullish move up to that point. You know, and on my 4-hour chart, we've gained a little bit of, you know, our momentum has slowed down on the downside, so we may get a little bit of a rally up to here for a potential for a reversal. In the euro, we have this area up in here as a potential reversal point, 1504 by 152. if price does just give us a jump up into here, this would be where you'd expect to see potentially price reverse. This is the area that was an old area of support. Old support often becomes new resistance. And we'll see if we see a turning point happen right there in the euro. And then finally, in the Canadian dollar. In the Canadian dollar, we'd have to look at this area right up here. This is I think a decent opportunity. 768 by 692, where if price rallies up in here, we can get a little bit of a reversal. Okay, so those are our levels in those major markets. Let's take a look last at the Great British Pound and the Japanese Yen. So one of the things that we looked at last night in the live trading room was this area here in the pound. We looked at a breakdown below this area, and we've started to get a little bit of a move out of it. So if you did take that, then you should be managing your stops accordingly with our fairly tight stop. And let's see if that breakdown does anything. So far, we've not really done a whole lot. Remember, our rules is that if I don't get a trade in about 6 candles, it's just probably not going to work out. So I'm going to let it kind of go at that point. Japanese yen, we're in a sideways price action. I'm very tempted to look at this level here for a reversal, but I don't really like the time of day that it was formed, and I don't like that our 4-hour charts are sideways. So I'm going to leave the yen be for the most part. We did just break down out of a little, triangle pattern, if you will, right through here. And so that could give us some additional momentum to the downside. So if you're more aggressive, you can just jump on an already moving train, and hopefully it's not moving too fast as of yet. If you're less aggressive, you can theoretically use that breakout as our next reversal point. And identify that breakdown as a reversal point if price does indeed come back up into that level. So that's what we have for today. My gut tells me to maintain my bearish posture, but I am looking a little bit at that positive divergence. I think if we do get a little bit of a rally, it will just be a short covering rally, and I think that there's no reason to believe that we've hit any major demand that would cause price to stop going down. So just if you do get long on any of these S&P markets or NASDAQ markets today, just make sure you keep those stops fairly tight. The Asian markets are under a little bit of pressure this morning. China's down 2%, and whereas the U.S. is kind of holding flat. Well, that China down 2%, that's kind of the leading indicator usually for Europe, and we'll see what Europe where they close up, and then that's what happens for the U.S. So until tomorrow, everybody, hope you guys have a great trading day. If you have any questions, please reach us support@tradersrock.com.